Yes, ma'am. Okay. So, good afternoon, everyone. I'm Mohd Imran. I'm founder of Indian Society for Legal Research. Currently, I am lecturer at Faculty of Shariah and Law, Villa College, Maldives. But currently, I'm in Delhi. And today we have Aastha Suman. Ma'am is an Indian Revenue Service Officer of the 2017 batch, and currently she is posted in the Regional Faceless Assessment Center, Bangalore, as Deputy Commissioner of Income Tax. She is alumni of NJS Kolkata, and she graduated in 2012. After graduation, ma'am worked in Luthra and Luthra for more than 3 years in their corporate team, taking the cases of private equity, banking, finance, mergers and acquisition. So, ma'am, once again, thank you so much for accepting our invitation. And I think the audience is really, excited to hear you on the direct tax laws and the recent developments on it. So I'll not waste much time on this. The floor is yours, ma'am.
Thank you so much. Can you put the
Yes, ma'am.
PPT also?
Yes, ma'am. I hope it's visible.
Can you make it
a little larger? Is that possible?
It's the full screen, I believe.
Full screen.
Yeah. Antika, I'm making you host, also co-host, so that those people who are joining now, you can give them yeah. So just give me 1 minute. Yes. Okay, I think there are more people joining.
Anyway, we can begin now.
Yes, ma'am. Just 1 minute. Yeah. I think PPT is visible, right?
Yes, it's visible.
Yeah. Ma'am, the floor is yours.
So thank you so much, Imran, Avantika. I'm very happy to be getting this opportunity to interact with all of you. So I'll be speaking on the recent developments in direct tax laws today. So I've chosen only very select topics to speak on, especially because if they have been in news in the last year. So I know most of you will be already aware of the basics, but tax is a very technical topic. So just bear with me when I'm trying to explain a few concepts. So we can change the slide. We can start with the first one. So let's start with discussing the Faceless Scheme. So the government launched the Faceless Scheme in 2020, and they made the new provision Section 144B in the Income Tax Act, which you must all be aware of. And you must also have heard in the media that this is one of the first schemes ever to have been implemented anywhere in the world. So this is like a game changer in tax administration. So what does this really entail? Now, a major chunk of the income tax officers are posted as assessing officers, and they are doing assessments in the majority of their time. So what is this assessment? Now, everyone declares their income and they pay taxes by filing their return. But a very few either do not file their returns, or they are filing them incorrectly, or they are fraudulently trying to conceal their income. So as a deterrent for such handful of people and to create fear in their minds, 2% of the returns filed each year are scrutinized by officers in detail. This is called as scrutiny assessment. Now, how are these returns selected for assessment? Income tax department is basically collecting information from a number of third parties. It could be banks, it could be sub-registrar, the land sub-registrars, it could be other government departments like the customs department, the Ministry of Corporate Affairs. So all these information we are collecting, and we are matching this information with the return which the taxpayer is filing. This matching happens by the computer, by a computer program itself, and the computer itself throws up a list of taxpayers who have not declared their return in line with what third-party information we have. So these are the kind of returns which are selected for assessment every year. So individual tax officers have very less discretion in choosing which case is assessed. And all this is happening through a computer-aided scrutiny selection mechanism. which means there's a very low chance of misuse of power by the officers and very low chance of corruption. Now, this is what is an assessment. But how is faceless assessment such a game changer? What is a faceless assessment? So earlier, how are the assessments happening? Now, if I am an officer, I'm posted in Bangalore. I will do an assessment of the Bangalore taxpayers within my jurisdiction. So I will hold proceedings for them. I'll call them physically to my office. I will gather evidence myself, going to maybe sub-registrar's office, collecting evidence, bank statements from the banks, etc., and then matching it with what the assessee is saying, and then I will pass the assessment order. Also, once I pass the assessment order telling them you pay these correct taxes, I am the one only who will do the recovery also if the person is not paying it correctly. But now everything is changed through the faceless. This was the old mechanism. Now, what is the faceless assessment mechanism? So, under this mechanism, the cases selected for scrutiny are randomly allocated to the officers anywhere in the country. So, how does this work? This works that if I am sitting in Bangalore, I can be getting a case of Guwahati, I can be getting a case of Durgapur, I can be getting any case. And my identity is kept secret. So, the assessee doesn't know who the assessing officer is. And all correspondences between the taxpayer as well as the income tax officer is taking place by email. There is no physical contact which is there between the tax officer and the mm, assessee. Furthermore, one important thing is now earlier what was happening, the assessing officer is the only person who is framing the assessment order. But now it's a teamwork. Instead of the decision being made by one assessing officer, all the decisions of the assessing officer has to first be approved by his boss, who is of the level of joint commissioner and additional commissioner. This is first level of review. Second, based on some risk parameters, some of these cases are selected for a second layer of review, and it goes to the review unit. Now, a review unit again has a reviewing officer and a joint commissioner, additional commissioner level officer, who approves all the review reports present by the prepared by the reviewing officer. So it's a teamwork which leads to an order, and a single officer is no longer responsible for the order. Sorry, I forgot to tell you guys to change the slide because slides are not really visible to me here. I think that this thing, so it's still in contents. Go to the faceless scheme. Yeah, sorry. So as you know, mostly the main aim of faceless assessment was to improve tax administration by making it very objective, by making it a team effort, by making it very transparent, and to remove the corruption angle. A similar structure like these assessments is also proposed for the first appeal, which happens before the CIT appeals, and the second appeal, which is before ITAP. But of course, all such dramatic schemes which can come up, they will have some problems associated with it. So let's see what happened last year when the faceless assessment was its pilot scheme. So there were obviously some teething issues. Now, why were one of the main issues was that adequate opportunity was not being given to the assessee. So what their complaint was that tax is an extremely complex topic. So to explain such a complex topic and with such a technical issues in writing on email is very difficult. So face-to-face interaction is a must, which is completely cut off by faceless assessment. And even though a faceless assessment has a provision that in case that a show cause notice is issued to the assessee, there can be a video conferencing facility arranged, but this is given in the end. So if I'm giving a show cause notice, obviously the assessing officer has already made up the mind. So it is too late to have the video conferencing facility. So then there have been some technical glitches also apart from this. So the technical glitches are mainly because see it's very bureaucratic system now. Now if I have to send a letter to a assessee, what I do is I draft the letter, then I will send it to my boss who's a joint commissioner level officer. He will approve it, then he'll send it back to me, and then I will send it to the National Faceless Assessment Center. Some officer sitting in National Faceless Assessment Center will digitally sign it, then he will send it to the assessee. So just imagine the time lag between when I drafted the letter and when it reaches the assessee. So some few mistakes have happened because of this. These mistakes are, for instance, now in some cases, show cause notice was received after the last date of response given in the notice. And also in some cases, few orders were also passed before the time prescribed in the show cause notice, without taking into consideration the submissions of the assessee. So all these obviously orders were bad in law and they were quashed by the High Court. These are genuine mistakes which have happened. But also one thing was noticed by the government was under section 144B9 there was a line given saying that if an assessment is not passed with exact procedure which is mentioned under 144B, then the entire procedure will be invalid or non. It is interesting that this year's budget they have just removed that one line which is there because the government believes that stringent procedure doesn't have to be followed. For instance, I might issue a show cause notice, it might not be in the format of a draft order. That shouldn't just cancel my order and make it invalid, right? So that is why this particular one line was removed. Now, this I'm saying from the taxpayer's perspective, what are the issues? Apart from this, the officers itself who are posted in the faceless units, they are having their own problem. Now, the biggest issue they are facing is non-compliance by the assessees or even third parties. Now, for instance, just imagine if an ordinary man is receiving an email from income tax department, there is high likelihood that he'll just take it as a spam and ignore it because every day he's getting so many telemarketers spam emails. So in olden times, in non-faceless scenario, if the assessing officer is doing the assessments, he's sitting in the same city as the taxpayer. So he generally either knows the taxpayer, or he'll just pick up the phone and tell the taxpayer that, see, there is a notice, there's a case going on against you. Please submit these details. Please give your representation. But now we are not allowed to pick up the phone and call. We're not allowed to make any kind of human interaction with the assessee. So the human touch in the entire thing is gone. So because of this, assessing officer not getting responses, so they have no option but to make huge tax demands. Also, in the old systems, as taxpayer was from the city of the tax, so not only the taxpayer, the tax officer was having a good network, local network in their particular city. So not only they knew the taxpayer, they knew bank officers, they knew the sub registrars. So getting third party information was very easy. Now if I'm sitting here and I'm sending a bank wala who's sitting in Guwahati an email say telling him to give bank statement about somebody in Guwahati, just imagine, most probably he's going to ignore my emails, and this is what is happening. Also, there are other small issues which are coming up now that the first batch of faceless assessment orders have been passed this year. So one issue is now, how does this leave section 154, section 263, 264 in wake of these assessment orders? Because an assessment order passed under the faceless scheme, it is already approved by a joint commissioner and additional commissioner level officer. Then is it okay for the assessee to approach a junior assessing officer who is junior to a JC or an additional CIT and telling that JC and additional CIT has made a mistake and you please correct it? And similarly with 263, 264 also. So these are small issues. Again, we'll see how it pans out in the next year. We can change the slide. Next issue I want to discuss was tax litigation. Now, obviously, this is a major issue not only in tax, in general in India, that we have an overburdened judiciary. And government is one of the main litigants who's contributing to this overburdened judiciary. In fact, India has been consistently receiving low rank in the World Bank's report on ease of doing business. This is partly because of their very low score in paying taxes. Now, why is tax litigation so difficult? It is very cumbersome because normally we'll have three levels of appeal. We'll have district court, high court, Supreme Court. But in tax, we have actually four levels of appeals. There is the CIT appeal, there is the income tax tribunal. Then if you're not happy with that, you can go to the high court and then the Supreme Court. So many times the current tax litigation takes almost 12 to 14 years to even complete. Government is very aware of this issue and they've been taking a number of measures. For instance, one thing they had taken a few years ago was that they tried to reduce the number of appeals which the income tax department is making. So they have decided that if some matter is below 20 lakhs, income tax will not file an appeal against it in IT. And if a matter is below 50 lakhs, we will not file it in High Court. Similarly, if it is below 1 crore, we will not go to Supreme Court. So this, of course, has helped to finalize the demand and end litigation in a lot of small issues. The second thing which the government has done, which has been the highly successful direct tax Vivad Se Vishwas scheme. So under this scheme, it's like a settlement scheme. So the taxpayer in whose cases appeals have been pending at any of the appellate level, they can come and use this scheme. So if the taxpayer has filed an appeal, then he is required to pay the entire disputed tax to avail the scheme. If he is paying the entire disputed tax and saying that yes, I was wrong, then as an incentive, no penalty will be levied on him, and there'll be a waiver of any interest which he was liable to pay. So this is especially useful for taxpayers who've been in litigation for a long time and who have a very, very weak case. This scheme can also be used by assessees who have one case in any of the forums and then income tax department has appealed against their order. But in such cases, they can pay half the disputed amount to avail the same scheme instead of paying the entire amount because they have at least one in one of the forums. So this is one scheme which we have seen in the last year, which has been highly successful. Now, in the current budget also, the government has stressed that they want to make tax litigations minimum and they want to clarify certain issues which are most litigated. So some of the repetitive issues have been clarified in this budget. For instance, Section 14A, they have clarified that. They have provided clarifications on certain disallowances, whether, for instance, tax includes cess or surcharge in case of Section 40, things like that. So this was in relation to tax litigation. We can discuss the next issue now, the retrospective amendments. You can change the slide. So I know this is a really old case, but this was again in news last year because the retrospective amendments in the Vodafone and KN case, they have been removed. They've not been, the retrospectivity of those amendments have been removed. So I just want to briefly touch upon the facts. I'm sure a lot of you have already read in detail about this, so just bear with me. Now, the basic facts are that Vodafone wanted to buy the business of Hutch in India. However, if they had purchased the Indian company directly by a share transfer or directly by an asset transfer, then Hutch would have had to pay huge capital gains tax. So, as a tax planning strategy, instead of direct share transfer or asset transfer between Indian subsidiaries, the holding companies, which were foreign companies of these Indian subsidiaries, they were the ones who transferred shares. So there was no direct transfer between Indian entities in India. However, there was still a change of ownership of business, and Vodafone India finally started owning Hutchison. So this is the showing exactly how Vodafone's drop-down companies were there, holding and downstream companies, and exactly how the sale happened. The next page you can have the next slide. So Section 9 of the Income Tax Act, which you guys would be aware of, it covers tax on non-residents. So at that time, Section 9 did not allow non-residents to be taxed unless the income earned by them was arising in India or accruing in India. So an ordinary officer like me was scrutinizing this Vodafone case. And he found that this was a very, very innovative way to avoid paying taxes. So it is like taking advantage of a blatant loophole. So this officer, what he did, he opened the scrutiny assessment, and by using the concept of look-through, he found that the ultimate beneficiary of this entire transaction was Vodafone India. It was Vodafone India whose business and market dominance had increased. He also found that the jurisdiction where the ultimate assets are located, from which the foreign shares derive their value, they're all located in India. So he concluded that the income generated in the present case was actually arising in India, and it was falling within Section 9 of Income Tax Act. So he thought that this was a taxable event for sure. But now who to tax? Because if he was taxing Hutch was no longer having any presence in India. They had sold their business and exited the market. So we can't just be taxing Hutch. So the revenue authorities took the stand that Vodafone India should have deducted tax at source before the transfer of shares between the two non-resident entities. And in this case, they used Section 195. Again, Section 195 at that time spoke only about a resident company withholding tax when they were selling shares to a non-resident company. It never mentioned about cases where the share transfer is happening between two non-resident companies. Obviously, Vodafone was not happy with this assessment order and they had approached the Supreme Court in this case. And the decision came long ago in 2012. Vodafone case was largely decided against the revenue. Why did this happen? This happened because tax statutes are strictly interpreted. There was a lacuna in the law, but this does not mean that the officers can sit and do purposive interpretation. and include something which was not explicitly covered by Section 9 and Section 195. Section 9 and 195 did not clearly mention cases of indirect transfer. So they cannot read something into Section 9 and 195. This is what the court held. So why are the tax statutes strictly interpreted? Now, tax statutes are fiscal statutes. So they are imposing a huge pecuniary burden on the citizens or taxpayers. And so such statutes have to be construed strictly. Unless the black letter of the law permits, no tax can be levied merely by doing some sort of purposive interpretation. This is also in accordance with Article 265 of the Constitution. Article 265 of the Constitution says that a tax can only be imposed by an authority of law. Another interpretative tool which is used in tax statutes was against revenue in this case. Now, whenever there are two possible outcomes in interpreting tax statutes, that interpretation is taken which is in favor of assessee. This was another reason that revenue lost the case in Supreme Court. The Supreme Court also refused to hold that there was any attempt at impermissible tax avoidance arrangement or this was a colorable transaction. Why is that? Because there is a difference, they said, between tax avoidance and tax planning. In the present transaction, it was a very genuine transaction. There was a commercial motive behind the transaction that Vodafone really wanted to buy the business of Hutch. There was no fraud shell company, there was no black money involved. So there's no question of really piercing the corporate veil or declaring it as impermissible tax avoidance transaction, etc. Also, even though this was a tax planning strategy bordering on tax evasion, there were no specific rules in the income tax statute at that time. Of course, later now we have GAR, which came into this is again another issue which was included in the income tax statute from 2017 onwards. And we'll now see our first few cases which have been approved by the GAR panel are coming up. So next year, this is one issue we'll have to see how it will pans out. So after this, coming back to the judgment, after this judgment, the government brought out a clarificatory retrospective amendment to Section 9 and 195. And they said that such indirect transfer of shares between non-resident companies where the substantial value of those entities are deriving from some asset which is located in India, such transaction will be covered by Section 9 and Section 195. So obviously, this just stuck at the root of the entire Vodafone's claim, which was that the entire Supreme Court judgment which they got in their favor was futile then. So now they took recourse. They still didn't agree to what the law was. And what they did was they went on arbitration to Permanent Court of Arbitration, Hague, on the ground that this retrospective amendment is in violation of fair and equitable treatment, which is promised under a bilateral investment agreement, which India and Netherlands had signed. So basically, Vodafone in Netherlands was the one who had sold the shares. It was Vodafone Netherlands who was being taxed. So they filed the case in Hague. Meanwhile, while all of this was happening with Vodafone, the retrospective amendment still existed, and because the retrospective amendment still existed, tax authorities did what they did with Vodafone in Kane also, which again opened further Pandora's box. In this case also, there was some sale of shares between non-resident entities, and nothing directly happened in India, even though there was change in ownership of India, which was a direct result of this entire transaction. Kane also, like Vodafone, filed an appeal in India, but they also started an arbitration proceeding like Vodafone. And they won the arbitration proceeding also. And when they got the award, they started enforcing the award very, very aggressively in all the foreign jurisdictions, even against foreign PSUs of India in those countries. So, in the interest of equity and to settle the entire matter, the Indian government last year made application of those Section 9 and Section 195 amendment prospective only. They said we will not retrospectively apply Section 9, Section 195 amendment to before 2012 cases, and hence Kane, Vodafone both will be saved from their tax liabilities. This shows the commitment of the government to have a stable and predictable tax regime. So, see, I had initially contemplated to speak on a number of other issues also, for instance, global minimum corporate tax, GAR, as well as tax on virtual digital currencies. But because these are too, but then when I was reading up on it, I thought that it will be too premature to comment on them right now. So instead, uh, do keep these topics in mind, because these are going to be the areas of news making in the next year. So this is all from my side. But because I've got this opportunity, I do want to hear what you all think of income tax department. What do you think is the future of our department? What are we doing? What are the main issues which the tax department might be facing? If any of you want to speak about it, I would really like to listen.
Hello everyone. The students here, you people have the floor. If you want, you can ask anything to ma'am. Keep it something related to the presentation only. So, but if anybody has any question, they can just unmute and ask. Uh,
Or you
Meanwhile,
can
ma'am, I have a couple of questions.
just one announcement.
Yeah.
The students can raise their hands, and we can call them one by one. Otherwise, there will be multiple people who might be speaking at the same time. So raise your hand, or you can text the chat box, whatever you feel free, and then we can call you to speak. Yes, Avantika.
Yes. So first of all, ma'am, thank you so very much for finding the time to speak to our students. Among the 20 to 25, 30 people that you see, most of them are my students, the one whom I teach taxes, and I'm very just very outsider to the matter. I just try my best, and then I study, and then I teach them. But listening all these things right from you, I think this is the kind of best kind of exposure that I could provide them. So my question, ma'am, first of all, that whenever we study about taxes, so it is mostly about that, there is a lot of scope for tax evasion and tax avoidance. And as you discussed the case of Vodafone, so it is about corporations and high net value individuals that are doing a lot of tax avoidance and evasion. But I had read many papers wherein it says that the biggest source of tax evasion in India is through agricultural incomes, because agricultural incomes are not taxed. So I would like to know that is it true, or if it is true, what is the measure that is being taken by the department for the same?
See, because I'm an officer, I can't be commenting on the policy of the government. But one thing I would like to point out is agricultural income is not coming under the union list at all. So, Income Tax Act does not cover agricultural income at all. But the people who can actually tax agricultural income is the state. So states can have their own revenue on it. And because 60% of the population is actually into agriculture, and we wanted to encourage the agriculturists and provide them as many resources as possible from the beginning. And from beginning, our stand has been that we will not tax agriculture, because they are coming from the poorest section of the society, and they are working hard. Most of them are themselves cultivating or themselves supervising somebody who's cultivating, etc. So this is a government policy, which and they have taken a stand that they will not tax agricultural income, and so that's been the case.
Yes,
But
ma'am.
of course, I will not be like to comment whether there is
Okay.
evasion happening or evasion not happening.
Okay, ma'am. Okay. Uh, and the other thing, ma'am, about the faceless scheme that you were talking about. So this is practically done to reduce, lower the number of corruptions. That is what the reason is given in the newspaper and the article that I have been through. So I just wanted to know, you were also talking about the inconveniences that people just might get a pop-up email on their desktop, and they might just ignore it. So how much inconvenience does it create for the officers and the tracking of that issues, that like that?
See, to tell you the truth, first year has been full of only problems, and obviously because this is first time in the world some such a scheme has been implemented, so we have nothing to look back upon, nothing to learn from. So we are learning on the job. So for instance, first we realized nobody is responding to our emails, and we can't pick up the phone and call them. So what we started doing was we started physically delivering the letters through verification. So we have a verification unit also in the entire faceless scheme. So we were not passing orders until the physical delivery of notice was happening. Even if they are ignoring the physical delivery of notice, what we are doing is we are trying to search for the assessee by sending someone to their house. So somebody from the income tax department will go to the house, check whether you are sitting in your house or whether the address is correct, whether it is a shell company, whether you've given fake address. All that is also happening. But this is happening on the job. For instance, this was verification unit started doing it maybe in December last year. So see, these are the kind of things we are improving. We are seeing what the issue is, and we are immediately taking action. The other issue was, for instance, I myself was facing was I'm sitting here, I'm getting some case of Gujarat. So all the documents are in Gujarati. Now I don't know Gujarati. If I was posted in Gujarat, I could have just told the person who's sitting next to me to read it out to me. But now what do I do? So for this also now we have found that there is a technical unit is there. So I can send all my Gujarati documents to the technical unit. So the technical unit will hire somebody who knows Gujarati. They will have a proper interpreter who is translating everything and giving it. So every small issues which are coming up, we are trying to resolve it immediately. But of course, it will take time for it to be smooth and awareness has to be generated. A lot of assessees don't have email addresses. The email addresses they have given is of chartered accountants, and the chartered accountants might be just ignoring. So all these issues are there. But because the benefits of this scheme is so much more, so these issues become very small. So just imagine this is completely just removed any corruption angle at all. So what a big benefit. So these small teething troubles will be there probably for few more years, but we are learning, we are changing. So it's becoming better and better every day.
Right, ma'am. I'm hopeful that such schemes will come into place because the Supreme Court has also commented upon this that only sheer innovation and new ideas can bring a revolution sort in the field of taxation litigation because they are stacking one upon the other. So, and that is causing a lot of difficulty. So those were my main two questions. I want to ask one more, but is there anybody else who wants to take some ask some question to ma'am? Come on, everybody, this is your chance. Okay. So, ma'am, one last question from my side. I'm so sorry. Ma'am, can you just throw a brief light on the taxation litigation? Like when we read or study the taxation law, it seems like it's a very complicated methodology. It first goes to the Commissioner of Income Tax Appeal and then goes to the higher forum. So, can you just briefly just throw a light how the appeal things work and thereon?
So basically, an assessing officer is the person who will pass the assessment order. So everything generates out of the original work comes out of the assessment order, which the assessing officers pass. Who will be the level of the assistant commissioner or deputy commissioner? My level officer. Then what will happen if the assessee is not happy with what my order is? He thinks it's very unfair. The first appeal he can go through is the Commissioner of Income Tax Appeal. So he is a senior officer, but he's from the department itself. So he will get the order. Now, if the Commissioner of Income Tax is also agreeing to what assessing officer has written, um, then and the assessee is still not happy, then the next forum he can go to is the Income Tax Tribunal. Now, Income Tax Tribunal are having independent judicial persons who are sitting there with experience in they're experienced law people. Now, CIT appeals, whose Commissioner Income Tax is not a law person. He might not be from law background. It is just by chance that I am a lawyer and I'm an assessing officer. My batchmates who are assessing officers, they're all doctors. They're fashion designers. They are all these people who have cleared the UPSC exam and they've come. So they are not very technically. They don't know the law that much. They are just fact finding body. So assessing officer is a fact finding body. CIT is a fact fighting body. So when you go to the ITAT, there's a judicial person who's sitting, who's taking a very legal this thing and giving you an order. Now that if you are not even happy with what the income tax tribunal has done, you can go on to another level. You can go to the High Court. You can go to the Supreme Court also. Apart from this, now we have a lot of other things. For instance, transfer pricing matters. Instead of them going to income tax tribunal, the assessee can decide and they can send it to a dispute resolution panel. Earlier, there was a settlement commission also where the assessee could have gone, but now that has been removed. So this is basically the entire setup. The tax setup.
Ma'am, thank you so much. As we speak, also, I have received 10 more registrations for this event. So definitely we will want to, people will, the students will want to hear from you again. And I just cannot tell you how many people are interested to, join this event. Might be of some difficulty that all of them could not be here today, but I'm saying this in advance that I'm going to hear this recording. I'm going to use whatever you taught us today in my classes, and I know the students are greatly benefited from it. And we hope to see you, call you again if you find the time.
Thank you
Uh,
so much, Avantika.
So,
I wish all
thank
teachers
you,
were
ma'am.
like you.
Thank you, ma'am.
So I think we don't have any further question. Ma'am, I have just one question. And then, so you talked about this Vodafone case and this Star Energy case, and that was, big issue in Indian tax system. Uh, so although India has, amended the provision, do you think that India should try to make provisions that are more prospective than the earlier provisions were in the tax laws? I mean, that was not, as you mentioned, that was not a tax evasion. That was just a loophole that Vodafone used. So I'm asking also in reference to, because I and Avantika used to discuss the cases of SEPI. She wrote a very interesting dissertation on the corporate fraud cases and how SEBI reacted to those cases, because the laws that are framed by SEBI are reactionary. They are not, they're not made in advance to protect any kind of, fraud. So do you think that we should also apply the same kind of principle, like we will be, or we, have the scope in the laws to meet some uncertainties? I know tax laws are, interpreted strictly, but is it possible in the case of like big corporations or those corporations coming through BITs to have some scope for the interpretation in such kind of contingencies?
No, so see, in most cases, it is not good to have retrospective application of law, which is it is obviously that is the case. But see, there are sometimes we are just clarifying things. So when it's just mere clarificatory thing, then there should be no problem by you making it retrospective, because for all for from the beginning the actual intention was X only. The what the legislature wanted was you to do X, but some people are just manipulating the law and reading too much into it and reading that X as Y. So then if the legislature is stepping in and just clarifying that X is X, it's not Y, they should be allowed to do that, right? So that those type of retrospective legislations, you can't say they are bad. But if there are retrospective legislation totally changing what the law really is, then that is bad. This is first part. Second part is, yeah, a lot of the laws today are reactionary, and because of obvious reasons, because
Yes.
you're learning on the job, and tax is such a thing. Every day the law is changing, every day the scenarios is changing. There are so many people who are impacted by it. Tax is such an important instrument to incentivize people, to prevent people from doing something which the government doesn't want you to do. All those things. Foreign direct investments are directly related to tax. There are so many things which are directly related to tax, and so many issues are coming every day. So the government has to be on its toes every day. They need to see what the issues are, and every day they need to come up with their own amendments or their own improvements on the law.
Thank you, ma'am. That was the only question I had. So I don't think we have any other question. Avantika?
Yes, if I receive any questions, which I'm very sure that I am going to receive because I'm getting texts. I don't know why they are so shy in asking in person, but I'll be directing all your questions to ma'am if when she finds the time. I'm very hopeful that she'll answer you, and we'll be calling her again, as I said. So you people have nothing to worry about. So thank you, ma'am, for
Thank
Excuse
you so
me.
much.
Yeah. Do we have to fill any feedback form for the certificate of demand or something like that?
Yes, we will share you with. We will email you this that form.
Listen, yeah, the participants, please don't leave the session right away. We'll talk about the other feedback forms and everything.
We
Okay.
can
So if you
email.
have any
Okay.
questions, you may. Otherwise, you can. We'll wrap it up then.
Thank you.
Thank you so much for joining us, ma'am. Have a good day.
Thank you.
Yes, participants. I'll give the feedback form. Imran, can you just share the link? So you have to fill the form, and as per your requirement, then you have to do the needful. The link for the certificates will also be sent on your email. So if you can just fill it right now, or you can fill it via your email also, then we'll provide you with the certificate and whatever is there you need. Okay. Simran, are you just pasting the link here, or we'll send it through email?
We'll send through email. That will be better so that everyone receives.
So we'll send you through email. Don't worry. So
Just in 5 to 10 minutes, you will receive the email.
yes.
Thank you, everyone.
Uh,